chart structure. As I discussed earlier in the book Secret of Pivotx by Frank Ochoa, he mentioned about the 6 types of market structure. But when I have done the backtesting, I have realized that for Indian market, we don't need 6 types of market structure. So I made it 3 types of market structure based on my experience and my backtest. So that's why I've done the changes. I'm not going to discuss 6 types of market structure, but I'm going to discuss 3 types of market structure. 3 types of Nifty and Bank Nifty chart structure. The first step in identifying your bread and butter setup is knowing the types of market days you will see time and again in day trade. Just imagine how simple it would be if you know that, suppose today is Monday, okay? And if you know that tomorrow what kind of market day you can expect, it will become much easier for you to trade, right? Because you know that tomorrow what going to happen, and then you can plan your trade accordingly with your entry and exit. Once you can identify the type of market day that is developing, you can identify which of your setups you need to deploy. Once market opened and you know that which kind of market day it falls under, then you can identify which of your setup you need to apply. That means which strategies you can apply on that day. Trading has always been about pattern recognition well in time before it happens in the market, sometimes even before market opening. So that is what many successful traders, they do it. That means before market opens at 9:50, already they can visualize the market, what's going to happen on that day, where market will open, where it will reverse, where they have to buy option, sell option, futures, whatever it is. Everything they have planned accordingly. That happens with the experience and practice. That is called pattern recognition well before it happens, sometimes even before market opening. The best trader can quickly identify the pattern of the market, which allows them to visualize where price is headed, and they already prepared with that order, the target and stop loss, right? So they can visualize which kind of the day, and already they are ready with the order, they are ready with the target, they are ready with the stop loss. Why stop loss? Because nothing works 100% of the time in stock market. Anytime your trade can fail. If it fails, then you need to have stop loss, right? Why target? Because you don't know that how far market can go. You don't know when the market can stop here, or it can go and stop here, or it can go and stop here. You never know that, right? For that, you have a target. Suppose you bought here, you have a target that once price reaches this price, I square off my position. Whether it goes here or here, I don't know. This is my target. So that is why target and stop loss important in trading, which we discuss when we go to the strategy section. Looking at the previous day price action, current day CPR, previous day CPR, other important levels like support, resistance, etc. can help in anticipating structure of the market for that particular day. That we are going to discuss in how to prepare your day before market opens. That we are going to discuss in much details. But looking at the CPR, current day CPR, previous day CPR, previous day price action, many times you can anticipate which kind of market structure likely to happen. Every market day is unique. Every market is extension of previous day and extension of previous few sessions. For example, if it is Tuesday today, then you should know that it's extension of Monday. Tuesday is extension of Monday. Wednesday is the extension of Tuesday. Okay, it's not a one individual different day. It's an extension of previous day. In day trading, that is what you should remember. Every day is extension of previous day as well as previous few sessions. Once you have mastered the types of trading that occurs in the market, you will be able to anticipate the trend, reversal, breakouts with a high level of accuracy and authority, right? You can anticipate trends, reversal, breakout with high level of accuracy. Once you know that which type of the market structure going to happen, then which type of the market structure going to happen out of 3 types, then it will become easier. Trading is game of repetition. Traders that can consistently trade the best repetition are those that have mastered the market. So as they say, history repeat itself, patterns repeat itself. So that's why patterns keep repeating, so that if you can master the pattern, then you can become a better trader. Some of the highly successful traders exclusively trade 2 or 3 setups in day trade, but they will continuously wait for this setup with big volume and big money in the market. So even though I'm going to discuss 25 strategies, 25 patterns, but remember, you don't have to trade all those patterns. You can decide which is your favorite patterns, which happens very frequently, and you can trade such 2-3 setups. So that is what I see in many successful traders. They look for just 2-3 main setups, which is very powerful setups. And whenever those setups happens, then only they take the trade. They don't take the trade for all the setups. And it can be very useful for people who are not full-time traders, who can't watch the chart every day from 9:15 to 3:30. For such people also, they can identify few chart setups which they think that more powerful, and they can only focus on those setups. So what you should do, you should focus on playing the best pattern setup at the right times while using the strict risk management techniques. And the best trader are those that quickly identify the pattern, successfully deploy their capital at the right location and best price. So the best traders who can identify patterns, they can deploy the capital at the right place at the right price. And the first type of the day is called trending day. Trending day is the first type of the day. Trend day is the most aggressive type of the market. So this is what the trending day can be bullish trend day or bearish trend day. On bullish trend day, market opens usually at the day's low, while close usually at the day's high. It opens at the day's low and closes at the day's high. That is called a trending day, bullish trending day. And what about the bearish trending day? Bearish trending day, market opens at the one end, closes at the lower end. So that is the bearish trending day. Bullish trending day like this. Bearish trending day like opens here and closes at the low of the day. Open equals to day side, while the market will usually close near the day's low. So trend day doesn't mean that it's always bullish. It can be bearish also. But what you are seeing here is the bullish trend day. The market will typically start fast on this type of day and price move away from value area. Suppose value area is 200, then initiative buyers think that new value area is 210, then very fast they will take it to that price. Initiative buying or selling is the reason for this type of market day. Initiative buyers have that strength to take market like this, and initiative sellers have the strength to take market like this. This type of trending days only occurs few times a month. So that you should remember. This type of trending day you will not see very frequently. This kind of days only occurs few times a month. Okay, trending days are very rare. And in the strategy section, we are going to learn strategies, how to trade on trending days. Next comes the sideways days. Sideways day occurs when both buyers and sellers are actively auctioning price back and forth within the day's range. Sideways days like this. It opened here, it went high till here, it came low, then it went high and finally closed it, right? So what is the day? Sideways day. Neither it went up, neither it gone down. It opened here and closed also somewhere near to the open. That is called sideways days, and which is usually established by day's initial balance. What is the initial balance? Initial balance generally defined as price range for first 1 hour of the day. First 1 hour of the day. Suppose it's a 5 minutes time frame. How many candles in the first 1 hour? 12 candles, right? So candle 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So this is the 12th candle. This is 12. This is the first candle, right? In that 12 candle, which is the high? This is the high. Which is the low? This is the low. So this is your initial balance. Okay, this is your initial balance. That is the first 12 candles. If it's 5 minutes time frame, high and low. That is called initial balance. So price normally trades between that initial balance on sideways days. It made a range here, and for the rest part of the day, it stayed between the initial balance high and initial balance low. That is the initial balance range, right? Initial balance high and the initial balance low as important points of reference in order to facilitate trade between buyers and sellers. Responsive buying or selling is the reason for this type of market days. What I said, responsive buyers and sellers, they will try to take market to the value area. If it is open higher, they will try to take it to the value area. If it is lower, then they will take it higher to the value area. For example, if it is higher than value area, responsive seller take here. If it's coming lower, responsive buyer will push price to the value area. So that is what happens on this kind of sideways days. Responsive buyers and responsive sellers are the reason. This second type of days, which is sideways days, very common in the market. So how I said, trending days happens very rarely. Sideways days very frequently happens in a month. And in our strategy section, we have strategies for sideways days. Okay, now we are going to see the third type of the day, that is the reversal day. Reversal days also called as trapping days, where initially it looks like a trending day, but suddenly market reverses and traps the traders. So what is the reversal day? Reversal day like this. Started with a huge bearish candle, right? Many people thought that it's a trending day, initiative sellers are taking price down and suddenly reversal. That is what happens on reversal day, which is also I call as a trapping day. Or opens with a huge bullish candle and suddenly you will see that market reversing, right? Bullish candle give an impression that it's bullish, market will go like this, but it is going downwards. So that is what reversal day or trapping days, that is also very frequently happens in the market. Initial balance generally wide on this type of days, but sometimes it can be narrow or average also. So what is the initial balance? I said first 1 hour, right? Initial balance first 1 hour, most of the time it will be wide, but sometimes it can be narrow. On this type of the day, price reverses and rallies or drops sharply to begin moving in one or other direction. Okay. So suddenly it can start going like this, suddenly reversing, or it can go and settle somewhere here. Sometimes it can reverse and make a big up move, or it makes a bullish candle and a big down move, or it can later stay sideways. Anything can happen. Every time it doesn't go like this, sometimes it can come and stay like this. Okay. So reversal day looks like a trending day, but it is reversal because first candle will be opposite of what market is turned out to be. Why? Because first candle is what? Bearish candle. But what is market is going? Bullish, right? So that's what I said. Sometimes it opens the huge bearish candle and reverses, or opens the huge bullish candle and reverses. So that is what the reversal days. This example charts, what I'm showing here, just for the illustration purpose. These images are just for illustration purpose. Okay, not necessary. It has to look exactly like this. It is just for your understanding. Just wanted to show you how reversal day looks like, opens with a huge bearish, then reverses, or opens with a huge bullish, then reverses. So that all we are going to discuss in strategy section. And we have strategies for reversal days also that we'll discuss later. With that, we have finished the chapter 2 and most important chapter, because this is the foundation for strategy section. We have divided 25 strategies into 3 parts, right? Trending days, sideways days, reversal days. So now when we go to the strategy section, you will understand it much better. So that's it about second chapter. Now we'll go to the third chapter.